Welcome to Express, the ALFI podcast, where industry leaders express their points of view on topics that affect the fund industry in Luxembourg and around the world. Today, I welcome Noel Fassi from Schroders here in Luxembourg. He's also chairman of the ALFI's KID working group. So could you please explain us what the key investor information document is and how investors have to read it?
Well, the key investor information document is a single format document for the entire industry, which is designed for retail investors to help them understand what a mutual fund is. And it is born out of a difficulty that the industry and the regulators had in the past, which was how to make a document that investors are likely to read and how to make it short enough that when they do read it, that they understand it. So there are really two goals for the key investor information document, and the KID as we call it. The first one is to make the fund transparent, to help the investor understand what is the fund about and what are its key features. And the second one is to make the fund comparable, because one of the problems that the industry had in the past was that you'd get different types of documentation from different companies. And if you put them side by side, then it would be very difficult for you to measure and to judge one fund against another. So transparency and comparability. So here is an example of a KID, a two-sided document containing all of the key features of Schroders funds in this case. And if you set it against a KID from another asset manager, the document would look very similar and you'd be able to compare the features of the fund. What I'm going to do now is just give you an insight into how to read the KID as an investor and also where it can help and where you might go for more information about what's inside the KID. And there are 5 main sections to this document. The first one being a brief introduction as to the investment objectives of the KID, of the document, of the fund, what is it designed to do, followed by a brief introduction to its risks, some information on what it costs, its performance, how has it performed in the past, and then a little bit of practical information. And so I think as you go through the KID, every time you read one, you'll get the same format. The important thing is to understand what it tells you and also what it necessarily does not tell you. Because 2 sides of paper is not a lot of space to put information about what can be sometimes quite extensive investment strategies. So the first thing is in the investment objectives section, there the portfolio manager, the fund manager, has an opportunity to explain what will he do with the investments, which sectors will he buy, what geographies will he invest in, what limitations will there be upon his strategy, what special techniques will he use. And one of the challenges inside the KID is that everybody is required to write the document with plain language, but in the industry, of course, we use a lot of jargon. So here, one of the difficulties that we have is to describe investment processes in very simple language. And you therefore might find that investment managers use a glossary to extend the KID a little bit. So you will find a reference maybe to the investment manager's website where you can go and find some more detail on some of the technical terms. One of the real advantages of the KID is that it tells the investment management industry not to use jargon where it's not absolutely necessary. So many of the things that we like to talk about, alpha, for example, and beta, and all of these technical terms are really not normally welcome inside this document. Other things that you might find in the first section is information about, for example, how long you should hold the fund for. For most investment funds, normally you can buy and sell it within a time frame of your own preference. But some funds, if you do that, then you're more likely to harm your own interests. And so the fund manager will advise you, maybe you need to hold this fund for 3 years, 5 years, or whatever it is, in order to achieve the result that you're looking for. And then finally, in this section, you'll find some information about when is the fund available for sale. So for example, is this available every day, or do you need to buy it once a week, etc. So that's the investment objective. That gives you the first introduction to what the fund is. Now the risk section is containing 2 essential parts. The first part is a synthetic indicator, a scale, 1 through 7, which gives you an indication of what is the risk of the fund based upon its historic performance. Or if it's a new fund, based upon a simulation of what its performance would have been had it existed. This scale is very important because what it does is it allows a non-technical investor to get a feeling as to what risk and importantly, what reward they're looking for in the fund. So if you choose a fund with a risk and reward indicator of 1, that indicates that you want very little risk, but you'll get correspondingly less reward. If you choose a fund with a risk indicator, a number of 7, then you'll get much more risk, much more volatility in the performance of your investment, but you'll get correspondingly greater risk that you will lose, that you might lose some money in that process. So risk and reward are combined in this single indicator. Normally that's driven from the historical price history of the fund. There are some complex mathematics underneath that which are simplified into this single indicator. The manager also has an opportunity to provide you with a narrative. And the purpose of the narrative is to indicate to you what special risks exist in the fund that aren't necessarily represented by the indicator. So for some funds, you'll find quite a lot of narrative because it contains a number of significant special risks. Normally, though, you should expect to see relatively few risks disclosed in the narrative because most of them will be contained inside the synthetic risk indicator. As an investor, you should be careful about the risk indicator because it is a little bit of a historical measure. It cannot foresee the future. It's also designed to change slowly so that the indicator doesn't move very frequently in response to short-term market movements of prices. So please pay attention not only to the indicator itself, but also to the special risks. Now, I think when you look at these two sections, you'll find that they're very concise introductions to the fund, but there might be other places that you can go to find more information that improve your understanding of the risk and reward and the portfolio itself. So, for example, I would recommend that you ask the asset manager for a copy of his monthly fact sheet. Why? Because that gives you a breakdown of what the fund is actually buying at a particular point in time. And it might contain a performance chart that gives you a better indication of what the price volatility of the fund is in the shorter time. On the second side of the KID, normally, there are 3 more sections. The first section gives you an indication of the costs of the fund, the total cost of owning it. So, for example, the cost of buying it and selling it, an initial charge and an exit charge if they exist, and the cost of running the fund on an ongoing basis, which we call the ongoing charge. There's also an opportunity for the manager to disclose his performance fee if he takes one. Again, the charges are laid out in a standard format, one fund to another, and there's an opportunity for the manager to include a narrative description of what those costs are. On the past performance section, we show the past performance of the fund as it was over the past 5 or 10 years, or any lesser period if necessary. And everybody must show the performance using the same method, which is a set of histograms. And again, normally this chart should not be more than half of the size of the document, so that the managers cannot use the graphical layout of the document to emphasize performance over a short period of time. If a benchmark is used to manage the fund, then the benchmark can be shown on the chart, otherwise it may not be. And again, if you imagine that you put this document side by side with another asset manager's document, you can compare the performance history of the 2 funds with respect to time. The final section is just a section that provides some practical information about where you can go to get more data on the fund. So, for example, it provides you with the address of the manager. It explains where you can go to get the full prospectus. This is the only document that you're obliged that a point of sales advisor is obliged to deliver to an investor, but there's much more documentation around a fund that we would recommend investors to read. So, for example, I've already mentioned the fact sheets, but if you look at the annual report and accounts, you will find quite an extensive list there of the fund's actual investments, and also some information about its financial performance in the year, and some detailed information about the techniques that it uses and some of the derivatives that it might be buying, for example. Similarly, the prospectus, the main prospectus, which is available at the point of sale but not normally delivered to the customer, is also available, and that provides a much more detailed description. And if you're a sophisticated investor, I would very much recommend that you take the prospectus and read it as a supplement to the KID. But the idea of the KID is that for the first time in the history of the European fund industry, that this is a single 2-page document, comparable and transparent for our retail investors to read. And I think it will be a great success.
So everybody should know now how to read a key
I hope
investor information document. Thank you very much, Mr. Fassi, for all these explanations.
Thank you.